It's been a very hotly debated topic over the past 6 months. Which stock is a better investment? Robinhood or SoFi Technologies? Both stocks have had an incredible year. SoFi has gained over 240% in the past 12 months, while Robinhood has gained over 420%. In fact, looking at the two stocks side by side, their path has been very similar. But Robinhood was recently added to the S&P 500, which has left many people wondering, will SoFi join the prestigious S&P index? So in this video, I will discuss SoFi stock, but I will also compare SoFi with Robinhood, and I will talk about upcoming events for the week ahead. If you're invested in SoFi, you will want to see this, so stick around until the end of the video because patience is the key. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. So as promised at the start of the video, which one is the better growth stock, Robinhood or SoFi? Robinhood has become a real player in financial services and it continues to expand its platform, while SoFi is an alternative digital bank with many innovative services. As we've seen earlier, Robinhood stock is up almost double SoFi's gain over the past year, but it's also much more expensive. First of all, there's no doubt that these are two of the hottest growth stocks on the market today. They're both fintech stocks and they're growing fast, but they have very different stories. Robinhood was founded in 2013 but really shot to fame in 2021, largely thanks to the GameStop short squeeze. They don't charge investors for trades but use a payment for order flow model, which means market makers pay Robinhood to get trades routed to their firms. Now, there was a lot of controversy around the business model back in 2021, and Robinhood was probably the most hated company in the US for a short period. A lot of people seem to have forgotten about this, and it's a whole thing that I'm not going to get into in this video. It also makes money from interest on cash balances, and more recently from its gold accounts, which require an annual fee or a $5 monthly fee. On the other hand, SoFi is much more similar to a standard bank, although it's all digital, and it's dedicated to providing easy-to-use services for its students and young professional core clientele. It also aims to be extraordinary, offering exclusive ETFs among its investment tools and access to private equity funds. Lending remains its main segment, but it also expanded to offering a wide array of fee-based financial services outside of lending that are growing at a very fast rate. Now, in terms of growth, profits, and opportunities, both of these companies are growing rapidly and they're both profitable. So let's see how their recent performances stack up against each other. Robinhood Gold members increased 76% during the past year to 3.5 million in the quarter. Their total customers increased by 750,000 up to 26 million. Robinhood is still a fairly small platform in terms of what it offers, but it plans to launch many new services like digital wallets in the coming months, as well as entering new markets. There's a long growth runway, and it looks like it's just getting started. On the other hand, SoFi added 846,000 new members last quarter, bringing its total members up to 11.7 million, and is focusing on its cross-selling and upselling strategy while attracting new customers. The financial services segment is leading the way, and revenue more than doubled during the past 2 quarters year over year. While both companies are growing rapidly in terms of members' profits and opportunities, they differ a lot on valuation. SoFi right now is valued at just 31 billion, while Robinhood's market cap has pushed to over 100 billion in the past week. The market is pricing Robinhood's growth much more than SoFi's. Granted, this is just one snapshot, and during the past year, Robinhood's revenue growth was higher than SoFi's. But SoFi is still the smaller company, which means it might have more opportunity. But both of these companies have a huge growth runway as they change the way people manage their finances. Now, if you enjoyed this type of analysis, comparing two companies against each other, then drop a comment below. This lets me know that you want to see more content like this. And remember to hit the thumbs up, This is so important to the channel. Likes and comments and watching the full video matter more than anyone realizes when it comes to YouTube's algorithm. The market might see Robinhood's greater disruptive qualities as a more compelling feature right now. That's also its greatest risk though. SoFi is different, but it still retains the look of a regular bank, while Robinhood's platform is built for riskier financial activities. In terms of stock valuations right now, SoFi stock isn't that cheap anymore, especially since the stock has risen 240% in the past year, but it's still much cheaper than Robinhood. Looking here, we can see that Robinhood's price to sales ratio is 29.6, while SoFi's price to sales is just 7.2. And SoFi's price to earnings ratio is about 54, while Robinhood's PE is pushing a massive 122. Considering that both companies have similar revenue and are growing revenue at a similar rate, as we see here, I likely side with SoFi as the better option right now. Yes, Robinhood has a far higher level of net income, and to be fair, 386 million from 989 million revenue is quite incredible, and net income growth of 105% is incredible too. But SoFi's net income growth is 459%. But this percentage will likely slow down as profits increase. But I feel like SoFi is the safer option. And as the smaller of the two, with the type of fintech that they are being more closely informed to a bank, I feel they have the scope for far greater membership growth. Now, Robinhood was recently added to the S&P 500, and that is a big deal, with a lot of people asking the question of when SoFi will be added to the S&P too. Now, although I don't see SoFi joining the index at the next rebalancing, should the share price continue to keep going up, as it has been doing for the past year, then I believe that there will be a very strong argument for its inclusion next year. Then if it continues, I feel it's very likely to see SoFi added in 2026. Now this is just my opinion, but from looking at the data, I really can't see any reason against it. Last year, I was one of the only people here talking up Palantir to join the S&P in September 24. I had been talking about it for a couple of months and got a load of comments telling me that I was delusional. Yet I couldn't see any reason why Palantir would be left out, and today Palantir is one of the biggest companies on the index, up there with Bank of America and above staples like Coca-Cola or Chevron. Looking at MarketBeat, we can see that SoFi stock continues to divide opinion, with a consensus price target from 21 Wall Street analysts of just $19. While the high price target is 28 and a low forecast of 12, the stock has 3 sell ratings, 11 hold ratings, and 7 buy ratings. But interestingly, 2 of the highest targets have been set in the past year were both the most recent. JP Morgan boosting their target up to $24 and Citigroup boosting their target up to $28 last month. But big analyst revisions could be ahead for SoFi stock because SoFi has new fundamental tailwinds working in its favor, placing the current Wall Street analyst consensus under pressure. Investors need to monitor 2 main indicators of SoFi's exposure to mortgage financing. One is the mix between housing supply and building permits volume, both of which are reading at levels near the extremes of their respective cycles. In other words, supply is now at a cyclical high, while permits are at a low. A return to normal will mean a surge in new demand for real estate financing through mortgages, and SoFi is poised to capitalize on this trend to drive up its valuation. The second indicator here is down to the Fed adjusting interest rates. So September 17 is a key date. That's when the next Federal Reserve meeting will conclude, and with it, many experts now predict that the first interest rate reduction of 2025 will be issued. While multiple rate reductions were issued in the final months of 2024, the Fed rate remained frozen throughout 2025. But there's expected to change this month, with the chances of a rate reduction currently listed at more than 95%. And the effect of this will trickle down into lower mortgage rates, meaning that lower financing costs could be the spark that mortgage markets need to wake up, which is why SoFi stock is one of the names investors need to keep on their watch list for a potential breakout in the coming months. Now, it's been a very long road for SoFi to get to this valuation, and I see a lot of people now saying that SoFi has reached the top and there's not much more upside anymore. But SoFi's valuation is still just $2 billion, compared to the likes of JP Morgan, which is over $800 billion. SoFi is still small enough that years of consistent high-speed growth could make long-term investors very rich if they're patient enough. And just a last point I want to make here about patience. Looking here at Nvidia's growth was so slow for such a long time. From 2014 to 2017, it was barely 50%. And again, from 2017 to 2020, barely 50%. But then over the past couple of years, there has been exponential growth. It took years of patience to get to this point. And now you see all the posts online of people saying, I wish I bought Nvidia 5 or 6 years ago at $3 or 10 years ago at 50 cents. I'm sure there's people who bought in 2004 and by 2014 they were barely up 90%. But by 2025 they are up 400,000%. Now, I know this is off topic, but I just want to make that point about patience. And I'm not saying that SoFi is going to go up 400,000% either. I'm just making that point about patience. Because I can guarantee you that a lot of people laughed at anyone holding Nvidia stock who was saying that this will be a millionaire maker. And I feel sorry for all the people who lost patience with SoFi stock throughout 22, 23, and even 2024. Because they've completely missed out on a huge run for the stock of several 100%. So what do you think about this? Let me know your thoughts in the comments. Are you still bullish on SoFi stock, or are you one of the people that thinks it won't go much higher than today's price? There's always a lot of talk on social media about SoFi, but always do your own due diligence. Remember that I'm not a financial advisor. This is not financial advice, so always do your own research. Like and subscribe, and I'll catch you in the next video.